I've pointed out the inverse hammer candle pattern to you many times before. I'm going to call it the God candle. Why not? Other people refer to God candles when it comes to crypto, so let's call this one the God candle. This is the inverse hammer candle pattern on the NYMEX Henry Hub day chart. Notice that it's characterized first of all by a long move down, and this takes place at the bottom of a trend near support. There's the support level at 1.5. We turned around and formed this candle at 1.52. An inverse hammer candle is the opposite of a hanging man candle. This takes place at the bottom of a trend, and a hanging man takes place at the top of a trend. An inverse hammer candle has a large upper wick and a small body. This enables us to get into the trade with a very tight stop loss, and we also know exactly when we're wrong. If we got a daily close beneath the low of this God candle, then that would indicate the pattern is broken. In this case, we gapped up straight after the candle, indicating that there was some bullish intent. This candle pattern works particularly well on natural gas, but it applies to all sorts of other instruments as well. And keep this in mind when you're trading things like gold, Forex, stocks, and cryptocurrencies. You'll also often see this pattern on the 4-hour chart, and my favorite combination is the one down, one up. These two candles, as you can see, taking place here at support at the 50, the 20, and the 100 period moving average on this 4-hour chart. When you see a God candle, the inverse hammer candle, taking place after a spike low, then it adds extra weight to the intent to go up. As I said, you can use this candle to trade many different instruments. Here's an example in gold. There's the inverse hammer candle pattern followed by the move up. And notice that we did not close beneath that inverse hammer candle. In fact, it was followed by a second one before the move up. That was gold. Here's the Nasdaq. There's the inverse hammer candle following this big bearish candle and then moving up from there. And here's another really good example from the Nasdaq. There's the inverse hammer candle pattern at the 20 period moving average support. Notice that even though we moved below it, we didn't close beneath it before moving up. And when we got to the top of the channel, we formed a spike high and moved down from there. Here's one final example from the Nasdaq. There's the hanging man candle pattern at the top of the trend. There's the 200 period moving average before the move down. There are indicators on TradingView for candlesticks which you can set up yourself, and they will put automatic notifications on your charts when these candle patterns form. And if you don't have TradingView charts, you can get the pro version for free if you sign up with Black Bull Markets as your broker. The link's below. Take care.